Wall Street's power players just made their moves, and they speak volumes. Buffett's cutting back, Ackman's making bold bets, and Icon's shifting gears. These aren't just trades, they're market signals. In this video, we're breaking down Q1 2025's biggest billionaire buys and sells, and what they reveal about where the smart money thinks the market's going next. Let's start with the Oracle of Omaha, Warren Buffett. For over 6 decades, Buffett has turned Berkshire Hathaway into a $1 trillion powerhouse by sticking to a simple but powerful playbook. Buy quality businesses at fair prices and hold them for the long haul. Buffett began investing at just 10 years old and transformed Berkshire from a struggling textile company into one of the most successful, diversified holding companies in the world, all through disciplined, long-term value investing. In Q1, he made a bold move on Constellation Brands, adding 6.38 million shares. He also increased his stakes in Pool Corp, Domino's Pizza, and Occidental Petroleum. On the smaller side, he added to SiriusXM, Verisign, and Heiko. On the flip side, Buffett cut deep into Bank of America, selling off 48.66 million shares, and fully exited positions in Citigroup and New Holdings. He also trimmed holdings in Charter Communications, DaVita, Capital One, T-Mobile, and Liberty Media Formula One. The moves are classic Buffett. Constellation's brands, Corona and Modelo, are dominating, with Modelo now the top-selling beer in the U.S. Pool Corp, and Domino's are niche leaders with strong cash flows, exactly the kind of durable businesses Buffett likes during uncertain times. His increased stake in Occidental Petroleum reinforces his long-running energy thesis, with Berkshire now holding a massive 28% of the company. On the sell side, cutting back on big banks like Bank of America and Citigroup aligns with rising interest rate risks and economic headwinds. Exiting New Holdings, a volatile fintech, signals Buffett's continued aversion to speculative growth. And with Berkshire sitting on a record $347.7 billion in cash, it's clear Buffett is staying patient, playing defense and waiting for the kind of market dislocation that lets him strike big. Now let's turn to Bill Ackman, the activist investor known for bold, high-conviction bets. Ackman made a huge new move in Q1, scooping up 30.3 million shares of Uber Technologies. That one buy now makes up 18.5% of his entire portfolio. Uber's firing on all cylinders. Ride-sharing is rebounding, delivery is sticky post-COVID, and they're inching toward profitability. Ackman's clearly betting big on the gig economy, and it's a calculated, forward-looking play. He also added to Brookfield Corp, increasing his stake by 17.5% with 6.1 million more shares. Brookfield is a real asset juggernaut, spanning infrastructure, real estate, and renewable power. With global infrastructure and energy transitions accelerating, this is a long-term play on stability and cash flow. Ackman also bumped up his positions in Hertz and Alphabet Class A, signaling confidence in both travel recovery and big tech fundamentals. But he wasn't just buying. Ackman completely exited Nike, selling all 18.7 million shares. Nike's been limping along with slowing growth, rising competition, and inventory hangups. Cutting loose makes sense if you're rotating into higher growth names. He also cut Hilton by nearly 45%, trimmed Alphabet Class C by 16%, and shaved off 12.6% from Chipotle, plus a small reduction in Canadian Pacific. Ackman's rotating hard into tech, mobility, and asset-heavy businesses with tailwinds. He's reducing exposure to consumer discretionary, likely a play on changing macro conditions. This is offense, not defense. He's positioning for upside. Now to Carl Icahn, the godfather of activist investing, who's making some bold, high-risk plays this quarter. Let's start with Illumina. Icahn ramped up his stake by a staggering 450%, adding 180,000 shares. Illumina dominates genetic sequencing, a high-stakes biotech frontier. My take? This isn't just a bet on innovation. This is classic icon. He's likely gunning for boardroom changes or a strategic shakeup. JetBlue Airways. He boosted his stake by nearly 90%, adding 15.9 million shares. Airlines are tough. Fuel prices, labor costs, brutal competition. But Icon doesn't take passive positions. If he's buying this heavy, he's got plans. Still, it's a shaky bet unless he can engineer a turnaround. He also made smaller increases in CVR Energy and CVR Partners, long-time holdings tied to energy and fertilizer. On the sell side, he trimmed Southwest Gas, unloading 2.1 million shares. That's likely just a tactical rebalancing. Icon's doubling down on sectors with high volatility and high potential payoff, like biotech and airlines. But with him, it's never just about the stock. It's about control, pressure, and value unlocking. Risky? Absolutely. But that's his brand. David Tepper didn't just show up this quarter, he made serious moves. Let's start with the buys. Tepper more than doubled his position, up 113%, grabbing 1.7 million shares. That makes 3 billionaire bets on Uber this quarter. Ride sharing and delivery are surging, and Tepper clearly wants in on the action. He also opened fresh positions in Deutsche Bank, L3 Harris Technologies, Broadcom, and Block, a mix of financials, defense, semis, and fintech. Plus, he boosted stakes in Meta, Taiwan Semi, Alphabet, Corning, NRG Energy, and more. That's a clear spread across AI, energy, and infrastructure plays. Now for his sells, Nvidia, slashed by 56%. Tepper's likely locking in monster gains. Nvidia's been on a rocket ship, and he's cashing out while it's hot. Also cut Microsoft and Oracle by nearly half. This could be a signal that even the most dominant tech names are getting too frothy for his taste. He went full exit on AMD, FedEx, EQT, Antero, Intel, and Expand Energy, and he pulled back hard from Chinese names like Alibaba and JD.com. The big picture? Tepper's rebalancing, pulling cash from overbought tech and energy names and reallocating toward financials, defense, and infrastructure. It's a bold pivot based on macro signals, and as always, he's not afraid to zig when others zag. Michael Burry just went full Burry, one move, massive conviction. The buy, Estee Lauder, a brand new position, 100,000 shares, and get this, it now makes up 50% of his entire portfolio. This is a classic Burry contrarian play. While most investors are fleeing discretionary stocks, he's betting big on a cosmetics comeback, banking on a rebound in consumer demand and brand power. High risk, potentially high reward. Everything else? Gone. He liquidated Alibaba, Baidu, JD.com, Pinduoduo, Molina Healthcare, HCA, and more. He's ditching China exposure and healthcare entirely, moving from diversified to ultra-concentrated. Burry's swinging for the fences with Estee Lauder. It's bold, high conviction, and high risk. Exactly what you'd expect from the guy who shorted the housing market before it crashed. Terry Smith is sticking to his playbook. Quality growth, no compromises. He bought Zoetis, increased by 1,020%, adding 2.3 million shares. This is a powerhouse in animal health. Zoetis has pricing power, consistent demand, and global reach. Classic Smith, Modi and reliable. New positions in Intuit and Catalyst Pharmaceuticals, both in high-margin sectors with long runways. Also boosted Doximity, Texas Instruments, Qualys, and Paycom. Strong balance sheets and sticky customers. He fully exited PepsiCo and IDEX, trimmed Microsoft, Meta, Visa, Equifax, and more. He's locking in gains on mega-cap tech and reducing exposure to crowded trades. Smith is rotating deeper into healthcare and SaaS, sectors with durability, pricing power, and growth potential. It's a high-quality, low-drama strategy that's worked for years, and he's not straying from it. Clifford Sosin kept it low-key, but cautious. No new buys this quarter, and that silence says a lot. Trimmed Carvana, cut by 10.86%. After Carvana's wild volatility, trimming feels like smart risk control. Also reduced Capital One, Hilton Grand Vacations, and Cardlytics. Sosin's not swinging for the fences. He's tightening the portfolio and dialing down exposure. No bold moves, just discipline. Guy Spear made a quiet but deliberate shift. He bought Core Natural Resources, new position with 8,100 shares. A subtle pivot, but it signals a move toward broader commodity exposure. He sold Arch Resources, fully exited. Coal's too volatile long term. Swapping it for a more stable natural resource play looks like Spear's way of de-risking. Spear's not chasing trends. He's repositioning carefully, staying in the resource space, but dialing back the risk. That's our Q1 2025 breakdown. Sure, there were more big names in the mix, but these are the investors worth watching right now. Buffett stuck to value. Ackman and Tepper leaned into growth. Icahn made activist moves. Burry went all in. And Terry Smith kept hunting for quality. Which one do you think nailed it? Drop your thoughts in the comments and let me know who you're following this year, what you are buying, or what you might be adding to your portfolio. If you found this valuable, hit like, subscribe, and turn on that bell. Stay smart, stay invested. See you in the next one.